Welcome back for another report on the oil market. After several weeks of moving in a sideways range, WTI continues to trade nearby $100 per barrel. Traders have a lot of information to digest at the moment as geopolitical tensions, post-pandemic issues and supply-demand constraints continue to drive the market. In this outlook, we aim to highlight the most important subjects related to the oil market and their potential of creating volatility. We will also provide a WTI technical analysis to support traders with a complete report on both technical and fundamental information. During the past days, weekly US oil market data created volatility for WTI once again, reminding market participants that the releases should not be taken lightly. On Tuesday, the 26th of April, the American Petroleum Institute inventory levels indicated stocks were in surplus of 4.78 million barrels. Minutes after the release, WTI's price dropped approximately $0.50. Moreover, on the 27th of April, during the important Energy Information Administration's crude oil inventories release, a minor surplus of 0.70 million barrels was indicated. Due to the fact that the market expected a notable surplus of 2 million barrels, the figure did not go unnoticed and WTI rose nearby $1 upon release. The market seems to respond more forcefully to figures that do not match the forecasted ones. Thus, we would advise traders to keep an eye on the releases in the next week. At the moment, oil traders are constantly monitoring developments in China, as after Shanghai, Beijing is now increasing COVID-19 restrictions. China, the world's biggest oil importer, has potential to destabilize supply and demand ends and create substantial volatility within the oil market. In the scenario of a general lockdown in Beijing, we could see oil prices tumbling. On the other hand, a partial lockdown can create some bearish tendencies for WTI, but perhaps not as strong as the first scenario. Major media sites and sources are expected to cover for any updates on the specific subject, thus traders are advised to be mindful of unexpected market reactions. On a different front, Russian tensions in Ukraine continue to create uncertainty within the oil market. The Russia-Ukraine conflict is expected to persist and no signs of a ceasefire can be seen at the moment. On the one hand, Russia, a distinguished and key player in the OPEC Plus agreement, seems to be creating more tensions in Ukraine, forcing Western nations to ban its oil trade. A report by Reuters noted Russia may see its oil production drop by as much as 17% in 2022. However, with no major oil-producing nations showing interest in covering for such a loss in supply, oil prices could receive support. This is a very delicate and complicated matter from our point of view, as higher energy prices could lead to higher commodity prices and eventually strengthen inflationary pressures even more. Thus, this subject could further exacerbate worries on oil demand and at the same time send contradicting messages of forces to traders and WTI prices accordingly. Moving now to our technical analysis in WTI's 4-hour chart, with the price action revolving around the S1 100 support, we have evidence that this level is recognized by the market. Yet other important levels at the moment are the R1 107.85 resistance and the S2 93.75 support. This range, colored in gray, has been used throughout April, and even though the levels have been tested, they have withstood pressure. Any move above or below this range can be evidence of the current sideways trend that may be changing accordingly. If the commodity heads lower, we note the S2 93.75 support as the next possible stop for the bears, while the S3 87.50 stands as our final support line. In the scenario of a movement higher, we could see the R2 115.15 level being targeted by traders, while the top consists of the R3 123.5, which remains the multi-year high level reached that was last tested on the 9th of March. The RSI indicator remains across the 50 level, displaying some uncertainty among traders. From all of us here at Iron FX, best wishes for solid trading.